San Diego's station for local news. News Radio 600, KOGO.
Good morning, everybody. Daniel Beer here of Windermere Homes and Estates with Todd Pianin at Samuel Scott Financial. This is News Radio 600, KOGO. And we are live this Sunday morning. It's an awesome Sunday morning here in America's finest city. If you'd like to call us, we're here. We want to speak to you. And the phone number to call is 800-600-KOGO. That's 800-600-5646. Or you could also connect with us always off air anytime today or during the week. And that phone number is 858-356-2020. And of course, you can hook up with us on Facebook. Just search for Real Estate Exposed, and you can shoot your questions through there. So it is, like I said, just an awesome morning, and I kind of want to go off. How you doing, by the way, Todd?
I'm doing great. It's a beautiful day in San Diego.
I love being here, and for whatever reason, I woke up this morning just thinking, what an awesome day, what an awesome weekend, and truly, I just feel so blessed to be in this city, and I want to take a moment just to pay honor to the place we live in, because I am blessed enough to be able to travel. I've been to a lot of different places, a lot of different regions, a lot of different countries, different cultures, different beaches, mountain regions, whatever you might want to say. I've been to a lot of places, and sometimes I stop myself because you have to bring yourself back to the reality of just how great home is.
Right.
I'll be in some of these places, and sometimes my wife and I will even gosh, we're enjoying it so much, and we start thinking, boy, what would it be like to live here? Or, look at the lifestyle they have here, and there really are so many great, beautiful places on this planet. And I mean, it's gotten to a point where we've even gone out and looked at real estate, even though we really weren't going to buy. That agent didn't qualify us too well.
But you're a realtor, and what are you going to do on vacation?
We like doing that.
Go look at real estate.
But what it really comes back to every time is, I suspect that if I ended up living in any other place than San Diego, you're always going to have that feeling, or there's always going to be the beauty of travel and exploring, etc. But you have to have a place to call home.
Yep.
And what we've just come to, absolutely be so happy with is that home is here. When we get that travel itch, we can go, and being home here in San Diego really though is exactly the only place we'd ever want to be, and just thought I'd share that.
Question on that subject about talking about San Diego.
Tell me.
I've talked to some friends of mine that do business in Los Angeles and Orange County, and the market's pretty crazy up there right now. One of the things that I've noticed being down here in San Diego is our market has gotten busier, but it's not as crazy. Prices, values, that kind of stuff down here in San Diego. I mean, I can't think of a better place to live. I love living here. When my wife and I come back from vacation, we're like, wow, we should just go on vacation here in San Diego.
Absolutely. No, it's...
But it seems like it's a hidden gem. I mean, are we just a secret to the world?
I always try to actually pull myself out of the body of somebody who lives here.
Right.
And this is like, really, I do this. And I try to think, if you lived in South Carolina, what do you think when you think California, or when you think San Diego? I think that, this is the type of place where if you live in somewhere in this country or anywhere in the world and you're going to visit California, unfortunately, or for, whatever it might be, these other cities are great cities, but San Francisco and LA are first to come to mind.
Right.
And those are just the cities people think they have to visit.
Right.
But
would you really want to live in LA?
I've done it, tried it, and there's a reason I'm here.
Exactly. Me too.
Okay. But San Diego, that's the place where the traveler that really just knows to do something a little bit off the norm, just, that you don't have to always do A, then B, then C, but you could actually go to paradise immediately, right off the bat. They do come here. It's definitely on their radar. And in a sense, you can understand it, because imagine you were taking a trip to France. It'd be hard not to hit Paris, right?
Agreed.
So you just kind of have to do it. But you tend to enjoy your countryside visits or the little quaint town a little bit more. At least I do.
Yes. No, I get it. I just, my wife and I were in Orange County last week, and we have a good time when we're there, but we're just happy to live here. And I just wonder why more people haven't. Well, I guess I'm happy that more people haven't discovered us down here, but it's interesting to me.
Well, the pending home sale data would suggest that they are, and that they're on their way. There's some really alarming, in a good way, by the way. So don't get worried out there if you're driving. stay in your lane. But there is some unbelievable data coming out of the pending home sale index, and just simply looking at the numbers.
Tell me, Dan,
so pending. First off, just so we understand what a pending home sale is out there, it's a home is pending if it was for sale. If you had your home for sale, it's now under contract with a buyer, but it hasn't yet closed. Okay, so the original owner still owns it. You're going through the escrow process, the closing process.
And traditionally, how long is that?
Traditionally in San Diego, that's going to be roughly 30 days. So that's kind of the benchmark number, but it's not at all rare to see a 45-day. We've actually, on our team, been involved with a number of 60 days recently. But, so somewhere, anywhere from 30 to 60 days, anything beyond that would definitely be considered long. But the numbers are staggering. So in February, we jumped from having 2,726 pending home sales, back in January, to in February having 3,187 homes under contract. And in March, we've jumped from 3,187 to 4,015. Okay, we're talking roughly 30% or so jump in pending home sales.
Wow.
And that is really, really a significant number. It does match up with data that we now have coming out of the pending home sale index from the National Association of Realtors, which revealed that homes going into contract in February, which is the last month we have full data for, increased to their highest levels since June 2013.
Wow. If you think about where were we at this time last year on pending sales, Dan?
Well, this time last year, there were 3,303 pending homes. Now we're at 4,015. So the numbers are really growing. The absorption rate continues to just be unbelievable, and demand, even though we have more homes coming on the market, as we've discussed over and over on the show, going into spring and summer, demand has...
As Dan always says, that's what everyone believes. The spring and summer, you're actually going to get more money for your home.
Yeah,
but Dan has proven otherwise.
But but this year might prove me otherwise, because the buyer demand is really keeping up. It is unbelievably strong. And in fact, the index is now 12% above February 2014 numbers.
So here's the question: that if I'm a seller and I'm selling my house has gone pending, with such a huge run up percentage-wise, what are the chances that these deals are all going to close?
That's a really great question. You're talking about the fallout rate that we're going to experience. So that is something that I want to really dive into coming out of the break.
Sounds great.
Okay, because if you're a seller especially, you have to be aware of this, and if you're a buyer, you might want to take advantage of this. So there's two sides of the coin. We're going to explore that all the way through. We are here. We're live on Real Estate Exposed. You're listening to News Radio 600 KOGO and iHeartRadio. Back with Todd Pianin of Samuel Scott Financial. I am your host, along with Todd of Real Estate Exposed on News Radio 600 KOGO. And if you'd like to call in, we'd love to speak with you. This is your show. Call us. Ask us any question. We'll be happy to answer it live here on radio.
We're live, people.
And we're at 800-600 KOGO. The phone number for that is 800-600-5646. We also do take calls off air anytime during the week, and you can reach us at 858-356-2020. All right, so we're going to pick up the conversation where we left off, because, Todd, that was an interesting just question you asked, and we were starting to touch on the fallout rate for all these pending home sales.
Yeah, so I'm a seller. And I just want to know, you put my house in escrow, Dan. What are the chances it's going to close? If we see such a high number that jumps up, are we going to see a huge fallout rate, or is this an indicator of what's going on in the marketplace right now?
So I think that there's a number of things at play. And let me say, we haven't seen a lot of fallout yet. Okay, so our team is still closing the grand majority of everything that's open.
Right.
But certainly it's worth having our eyes open to the fact that there's going to be more and more psychology at play on the buyer's end when they start experiencing and continue to experience this high velocity market.
So can I ask, are buyers tying up properties, Dan, just to and then sort of sitting on the fence and thinking about it right now? Because, I mean, in previous episodes, you've talked about how like buyers have written multiple offers on multiple properties and haven't gotten properties. Looks to me like there's a lot more properties in escrow. So what's
the numbers back up everything we've been talking about. And so if you kind of just, I like to think in very simple terms, very granular terms, kind of put myself in the shoes of that buyer. So let's do that together. You're a buyer. You've now made a few offers on a couple different properties. You've lost out to somebody else. You see how fast these are moving. And by the way, maybe you didn't make an offer at all. Maybe you saw the home you liked. You said, you know what, we're going to go back home and think about it over the weekend. We'll make our offer on Monday. Monday, the home wasn't there anymore.
It was gone.
It was gone. Okay, so if you're a buyer and you're experiencing that, what I'm getting prepared for and really having to qualify the heck out of that buyer if I'm working, if I'm working on behalf of the seller, is that there is a possibility that buyers will start to tie up property, put it in escrow, or in other words, make the property go pending before they're 100% convinced that it's really the home they want, because they start realizing that they have to make a very fast decision. So they're going to start, I anticipate we're going to see more buyers tying property up and then thinking, what do they want the house over the weekend, with their family. And then some of those are going to be let go.
So let me ask, you run two sides of a team. I mean, you run a listing side and you run a buying side. So,
about 50-50. We do just as much of both.
So how do you protect your sellers in that situation? And then I'm going to ask you the same question, and how is it okay for you to let your buyers do that as well? So for the seller to be able to protect, and we're going to expose what you're doing.
Yeah.
Which means what
I'll be frank on what we're doing, on what I'm coaching our buyer specialists to do, and what we're doing when we're talking to our sellers. So if you're a seller, your agent needs to be really dialed into the why behind somebody. They have to understand the buyer's why. Why are they moving? What do they want? Why do they want that? Why is it important? And just face facts. If they have creaky knees and they came in with a walker and you have a 3-story home, that might not be the guy that's going to close escrow with you.
Right.
Okay. And we want to talk to that person's lender.
Right.
And we just want to make sure that they are qualified. And preferably, we want them talking to our lender. And you, Todd, being one of our preferred lenders, we want them speaking to you so we have the green light on, we can make the best, most educated decision if that's the buyer that's likely to close. So we don't want to rush into bed with a buyer in this kind of market. Now, when we're coaching our buyers, or when I'm speaking with our buyer specialists on our team, such as Brian Danny, who's one of the county's best, it's a little bit of the opposite conversation and just the facts. I don't mean to sound like I'm speaking out of two sides of my mouth, but there's strategy that has to be played on both sides.
Right.
And in a buyer, there's an old saying in real estate that if you sleep on it, you won't sleep in it. Right. So if you want to sleep on the decision, you're probably not going to get the house. That's very true right now. Okay, so if we understand how the contract works, if we understand that we can, making an offer and getting an acceptance is really just a reservation.
Right.
Okay, you still have to make your initial deposit. You still have to investigate the property. You still have to be completely satisfied until you finally remove contingencies and become committed to the home.
Clear.
Okay, so we're not at all suggesting that any buyer out there just frivolously throw offers into the air and see what sticks.
Make reservations across the county. We
do not want people doing that. In fact, we won't work with people that do that.
Right.
We won't work with that buyer. But when we see that home and our buyer tells us, you know what, we always ask our buyers to rate homes on a scale of 1 to 7. And when they rate something a 6 or a 7, especially if it's a 7, and there's anxiety involved sometimes if you're a buyer of actually making that offer.
Right.
Now we're really encouraging that offer to be made. Make the offer. You said it was a 7. It ticked all the boxes, or most of them. And then go home, sleep on it with the home under your control. And then if it doesn't feel right in the morning, we'll just simply let the seller know.
Well, is it under your control? I mean, you're basically saying read an offer. I mean, it may take the seller 24 hours to get back to you, right? So at least you're in play. You're at the table.
That's true too, right? So I kind of jumped ahead a little bit there and oversimplified it. So you're exactly right, though. You're still going to have to get a response from the seller. They might not even be in town. We just want to get that going, and more than anything, we want to start romancing the listing agent,
right?
Because if the listings agent's doing their job properly, they are going to want to. We're going to need their endorsement. Okay, so, but having said that, not everybody out there is going to operate this way. Not everybody, and there's simply going to be a little bit more fallout rate. Right. I think that you're correct. So while
I'll be interested to see in April when we bring the numbers up. I mean, let's bring out the fallout rate for March. Is there a way to pull that up?
I'd love to bring that with me, and so we'll talk about that coming next week.
Perfect.
Next week this time. So Todd, since the market's moving this way, and we really are in a healthy market right now, I'm still hearing out there from buyers that believe that a mortgage is still tough to come into.
Mm-hmm.
But having said that, there's been, the Mortgage Bankers Association just recently published the Mortgage Credit Availability Index, and according to their site, the index is that index is a summary measure which indicates the availability of mortgage credit at a point in time. Things seem to be getting better out there, and in fact, the chief economist Mike Fratantoni recently said, quote, that a number of factors contributed to a loosening of credit in March. Freddie Mac's introduction of their 97 LTV program, that's Fannie Mae's, was implemented in December, and the additional loosening of parameters on jumbo loan programs. Although credit remains tight by historical standards, this increase in availability, coupled with low rates and job market strength, should lead to stronger home purchase activity this spring. So is that echoing what you're seeing?
100%. I mean, the problem that we're running into, or not the issue, running into is the interest rates are still low. And so you're running into buyers trying to buy and also people trying to refinance at the same time. So you sort of have and everybody in the mortgage industry was prepared for a slowdown in the mortgage market. I mean, if you look at Fannie Mae's data, they did not expect the kind of numbers that we're seeing and doing this year on the sales side as well as on the refinance side. So there's been it's easier to get a mortgage, but there's a lot more people trying to get a mortgage right now because you have people trying to refinance and trying to buy.
So does that mean there's some clog in the system?
It's a huge clog in the system. We have one of the owners of our bank, because we're a bank as well as a broker. She always says we're just like a third of the way of like a big boa constrictor eating a big rat. It's like we're a third of the way to the stomach. We're not even there yet because we have just a glut of just so much activity.
How does that affect someone that's simply looking to get a loan to buy a house? What does that mean for them?
They want to make
what does that mean for me as an agent? I mean, do I have to be doing anything different?
No, you just want to make sure that you're working with a mortgage bank or a mortgage banker or a mortgage broker that specializes in the purchase market, because like for us, we treat purchases with higher priority, and we make sure that we get those answers quicker for our clients.
Okay.
But if you work for, I hate to say it, some of the big banks out there, I mean, as you and I have said on this show before, a loan is a loan is a loan is a loan. So to a big bank, it doesn't matter if you're a refinance or you're a purchase, they want to do a loan's a loan, right? So they make the same amount of money. So we all make the same amount of money across the board, but you just want to make sure you're working with somebody who specializes and prioritizes in purchases, because that way they can expedite the process. Like our bank, for example, we expedite purchases versus refinances, which kind of stinks for the person who's trying to refinance, but that's not the company that I built, or the people who I work with at Samuel Scott Financial Group, that we want to be. We wanted to be a purchase-driven company.
That makes sense to me on just a simple level of, there are some refinances that are time sensitive. Most are not nearly as time sensitive as a purchase.
They are when you lock in interest rates, though.
When you lock in the interest rate, you want to make sure that you get it done before that lock is expired.
Exactly.
Right. But typically on a refinance, it's not going to make too much of a difference if it closed on Tuesday or on Wednesday.
No, it doesn't make too much of a difference, except that if let's say, for example, you're paying 5% for your mortgage, and now we're getting you 3.5% for your mortgage, and it takes 45 or 60 days to close your refinance, you want to pay that cheaper money.
All right. Got it. So what does the cheap money look like right now? What are rates doing?
Rates, there's a lot of chatter on the street right now that rates are going to start going up in June. So we saw a little more activity in the mortgage market that we saw.
Well, we had that chatter, then that
Chatter
went away to some extent. Are you saying
chatter's back?
What's going on?
So they're saying the economy is still heating up. They're saying that the job market is still very strong, and the only way the Fed can kind of cool that down is by increasing interest rates. So the words patience is back in the vocabulary.
Okay, so you're expecting that June now is going to be possibly when the Fed is going to make a move.
It's
all right. I want to pick up this conversation on what's happening. This is going to impact a lot of people. So we're going to come back to that. I'm Dan Beer with Todd Pianin. You're listening to Real Estate Exposed on News Radio 600 KOGO and iHeartRadio. And we're also back here on Real Estate Exposed. I'm Dan Beer with Windermere Homes and Estates and my friend Todd Pianin at Samuel Scott Financial. This is News Radio 600 KOGO, and you can call us here live. We're at 800-600-KOGO. That is 800-600-5646. Or you could always drop us a line anytime off air at 858-356-2020. And Todd, we left off talking about interest rates, what's happening in that environment, and I wanted to make sure we didn't rush through that because it's critical that home buyers right now understand the window and opportunity that's in front of them, the ease of getting a loan, and just really what the markets are doing and how they might change. Yeah,
so like you and I were talking about at break, Dan, it's kind of become like a telenovela with the Fed,
The world's greatest drama, huh?
Soap opera, right? What's the Fed going to do in June, right? So 2 weeks ago, we talked about them being patient in June and not doing anything, and now everyone's talking about them raising interest rates in June. So, it's the best telenovela I've watched in a long time.
Yeah, I grew up in a house that was actually filled with telenovelas.
Okay.
And they're very, very dramatic.
Yes.
Very overacted.
Yes.
It seems like that's what's happening now as everyone reads, volumes and volumes into every single word and nuance. And did he scratch his nose or did he not? Or did he look left or right?
Exactly. That's what's going on.
I mean,
the Fed.
Exactly.
Yeah, I know what you're talking about. So interest rates, where are they going? I think they're going up in June. I think we're going to see some interest rate movement. But right now, we're seeing low interest rates. We're seeing rates, still back under. We're seeing rates on the conforming side back under 4%. We're seeing jumbo money still in the 3s and 4% range, depending upon the program. One comment you made before going into break, Dan, was jumbo loans, and a lot of people are sort of like scared of doing a jumbo loan, and they think it's very difficult to get a jumbo loan. And a jumbo loan would mean anything over 566, which is Fannie Mae high balance. Anything above a $566,000 mortgage. Mm-hmm. And we're actually surprisingly seeing it's a lot easier to get mortgages on jumbo loans than in some cases easier than it is to get a Fannie Mae loan in a lot of cases.
What?
Yep, you heard it here. We've got clients that we have some lenders out there that we deal with, that we can either broker to or we sell to on a closed loan basis. That their guidelines are not as strict as a Fannie Mae loan, for example. Somebody, for example, who had a short sale 2 years ago.
Okay.
We can do a jumbo loan for that person. Someone who had a foreclosure, a day out of foreclosure, we can do a loan for that person.
And are those like Fannie Mae regulated loans? Or are those portfolio loans? Or who are these investors?
So they're on the jumbo side, they're sold in pools. So you and I could actually be the investor on that deal because your mutual fund may own some money that bought into a big pool of loans that's trying to get a yield.
Got it.
So that's one. But the things that people don't realize is that to get a loan after a short sale, in most cases, it's 3 to 4 years. Most cases, to get a loan after a foreclosure could be up to 5 to 7 years. To get a loan after a bankruptcy could be up to 5 to 7 years. And we have jumbo lenders that will actually do a loan a day out. Someone could be out of foreclosure a day, and you could sell them a house.
Wow. Okay. So, Todd, something else is jumping out at me. You're talking about you have lenders.
Yes.
But you're a lender.
Yes.
Or you're a direct lender or a mortgage banker. I need to understand, and I think the public needs to better understand, and I'll admit my own just being in the dark about this one.
Yes.
I hear people refer to themselves as mortgage bankers,
Yes.
direct lenders,
Yes.
or brokers.
Yes.
I understand broker.
Okay.
Okay, broker, someone comes to you, you're going to broker a loan to this bank or to that bank or to that bank. You're basically going to put the loan in place wherever best fits. Can you can you try to bring some clarity to what the difference is between the other two?
Yes.
Okay.
So let's talk about a direct lender. Direct lender would be like your big bank, your Wells Fargo's, your Chase's, your Bank of America's, your U.S. banks.
That's a direct lender.
That is a 100% direct lender. They only sell Wells Fargo product. They only close Bank of America loans. They only deal with U.S. bank product. That's it. That's when you go into that bank, they have a menu, and they only sell what's on that menu.
Yeah, Wells Fargo's not doing a B of A loan.
No, Wells Fargo's not selling a loan to Bank of America. That's their competition. They're not going to do that.
Exactly. Okay, Got it. Simple enough.
So then a mortgage banker is somebody like Samuel Scott Financial Group. We are a mortgage banking company, which means that we have our own warehouse lines, that we have our own delegated authority, which means that we can do loans up to $2 million for the sake of argument, that we have the signing authority for, that we actually approve, draw loan documents ourselves, and fund ourselves, and then we sell those loans to a variety of institutions. Could be a Bank America, could be a Chase, could be a U.S. bank down the road. We could be selling it to J.P. Morgan. We could be selling it into a REIT. We could be selling it directly to Fannie Mae. So what that is a mortgage banker.
And so a mortgage banker like yourself, then you're actually underwriting the loan yourself?
Yes, we're underwriting the loan ourselves.
And
we have multiple investors we can choose from. So instead of having one menu that only, let's say if you go into a restaurant and all they serve you for breakfast is French toast, we have a choice of French toast, pancakes, eggs. You can get orange juice on the side, that kind of stuff. We can do all those things as a mortgage banker. We're not just being told what to sell. We have a potpourri of products.
So, I might be wrong on what I'm about to say, but I think what I'm hearing you say is the mortgage banker, you're going to underwrite the loan.
Yes.
You're going to basically take responsibility for that loan.
Yes.
On being able to then sell it to a secondary market.
Correct.
If you can't sell it to a secondary market, you might be stuck with it.
Correct.
And you're willing to take that risk.
Yes.
So in a sense, you're like a direct lender in that you're actually going to do your own underwriting, but then you're going to have a like you said, a menu of places where you can then
we could sell the loan to. Correct.
Okay. So then when you're underwriting a loan as a mortgage banker, you're having, you're not just doing this willy-nilly, freely. You're doing it per guidelines of your investors so that you can make sure to get it to where it needs to go.
Correct. We have to also have a very high net worth to be able to do that as well, because we have to be able to subsidize. If we take the loan back, we have to have the money in the bank to be able to take the loan back too.
Interesting. Very, very, very interesting. Okay. Well, good. Thank you for bringing clarity to that issue. And so this is Real Estate Exposed on News Radio 600 KOGO. We're going to be right back and talk about a couple of very interesting topics, including homeownership and creating wealth, as well as the success story behind the sale of LaDainian Tomlinson's house, and how you could take a previously expired listing that had failed for 3 years and get it sold at full price in 16 days. We'll be right back after this. We're back here on News Radio 600 KOGO. This is Real Estate Exposed. I'm Dan Beer with Todd Pianin. And Todd, going into break, we were talking about the difference between a mortgage broker, a mortgage banker, and a direct lender. You described the differences. The one question that went unanswered is, why should anyone care? How does this affect the buyer?
So back in the old days, basically, a buyer would have to drive in their car to Bank of America, drive in their car to Chase, drive in their car to U.S. Bank, and they'd see what the rates are. And then they choose which lender they would go with that way. Mortgage banker, what we can do is, because we're selling to Wells Fargo, we're selling to a Chase, we're selling to a U.S. Bank, we can sell those loans. We're actually doing the shopping for the buyer, so they don't have to drive around. We're finding them the best rate, and that's what we're doing as a banker.
Which, if I may, is sort of like a broker.
Sort of like a broker, except that we have all the control because we're underwriting it ourselves. We are drawing loan documents ourselves. We are funding it ourselves.
Sort of like a direct lender.
Correct.
Okay.
So you take the best. It's basically we get the best of both worlds, because a mortgage broker can basically do all the shopping for you as well, but they're kind of at the mercy of A, what lenders they're working with, and B, what those lenders' turn times are. We control our own destiny, and that's why I've chosen in my career path for the last 25 years to be a mortgage banker versus I've never worked for a big bank. I've never worked for a mortgage broker.
To me, this is a very interesting topic and something that's widely misunderstood in the marketplace. So in case anyone has further questions on that, just wants to reach you directly, do you want to tell them how?
Well, they can call us on 858-356-2020. They can go to samuelscottfg.com, and it'll talk about our company and talk about all the different programs. And, again, reach out to Dan or I off air at 858-356-2020.
All right, so we're gonna switch gears here a little bit.
Yes, back to real estate.
And one of the questions that we get a lot is when we're talking to people that have previously attempted selling their home, weren't able to. They might have been on the market for whatever some people 3 months, 6 months, some people a year, and we're going to give you a more dramatic example in a moment. But the question comes up often, how is it that you're able to take, how you're able to work with sellers that had previously gone unsold?
Right.
Sometimes the price stays the same, sometimes it changes, but the point is it's not always price. How are you able to then take those homes and get them sold within, a week or 14 days or under a month? How does that turnaround story happen, and how does it happen so consistently?
So before we go any further, Dan, I there's a lot of chatter with your competitors out there, because we do business with a lot of your competitors as well. Mm-hmm. And
you're one of the best out there. I understand that.
So, one of the things they always bring up is they always go, Dan, so-and-so had that listing for 6 months, but Dan sold it in like a week.
Yeah.
I mean,
so how does that happen?
Yeah.
Right?
Yeah. I mean, you have a lot of supporters and happy people that you're selling their homes quicker than a lot of other people. I don't mean to be tooting your horn here, but you also, there's got to be a secret sauce you're doing.
So I'm gonna kind of dissect the most the most famous story we have of how we've of turnaround story of a previously expired listing.
Are we going to talk about like one of the best running backs ever played, who's ever played for San Diego Chargers?
He might have been that. So as you know, and as I mentioned going into break, and it's we did sell LaDainian Tomlinson's house after 16 days.
After how long was it listed for? At
full price. It had been listed for 3 years with another agent.
With one agent or multiple agents?
It had, I actually have to go back and double check that, because my belief had been that it had been multiple agents, but it was all within one company.
Got it.
One of the big companies out there, by the way. And so how did we sell his home in 16 days at full price, especially at a $3.5 million price point where homes don't typically sell at full price?
You know what your competitors...
And we did it in 16 days.
But you know what your competitors are saying? Is that you just lowered the price, and that's how come you sold it so fast.
All right, so that's why we're going to dissect exactly what happened. Okay, I'm going to walk you all the way through stepping into their living room, meeting them, going through the diagnosis of the property and what we did to turn this thing around. Okay, so first of all, there was a few key things that happened, and one of them, you're right, it was price. Okay, but price was very curious, because we get there. And the first thing I ask is, we went through some conversation, but really when it was just time to really bury down into it, I actually asked LT directly, and I said, what do you want out of this house? And he said, quite honestly.
He gave you a number.
Yeah. Quite honestly, Dan, I'd be happy with $3.3 million. It's not what I want. It's not what I was hoping to do. But at this point, 3 years into it, I would do that. I said, well, hold on a second. Why on earth are you listed for 3.75? Okay, right. Why are you listed at $3.75 million when 3.3 would do it for you? And not to mention the fact that even at, anywhere in between there, you'd be setting the highest price per square foot sale in the neighborhood over 12 months. So first thing we did is reposition.
What did he, when you said that, what was his comment?
Well, they wanted a negotiating room. A very
That's a pretty big
prevalent comment that I get out there, especially in the luxury market. People want negotiating room. But when we look at the numbers, and I look at them every single month, we know that homes are selling within a tight window of the listing price.
We talked about that last week.
The buyer is not afraid to pay a fair price, especially in this market, especially in this high velocity market. The buyer just needs a fair deal. They don't need, this isn't 2010. They don't need to beat you up.
Right.
They just need to get a fair deal. And by the way, when they're missing out on other homes that are priced correctly, the buyer's conditioned to not even look at the home that's listed too high. You not only don't get the lowball offer so that you can then negotiate, you just don't get the offer. You sometimes don't get the showing.
Interesting.
Okay? So we repositioned his pricing to $3,495, which does another very important thing. We have to understand how people actually look for real estate. They're on a computer. They're in their pajamas. They're flipping home after home after home, and they're doing a search up to a certain number.
Right.
And by being listed over that $3.5 million number, he was invisible to the world of buyers out there looking up to 3.5. And 3.5 was at the top of what that neighborhood was selling for. Okay, so basically he was invisible to most buyers. So we changed that. Secondly, we walk in, the home is vacant, and it's just not showing well. It's vacant. You're talking about a near 9,000 square foot, just cavernous vacant house.
Well, they moved out. They moved all their furniture out.
Everything was gone. They were already gone. They were in Texas already.
Got it.
Okay, so they came back for this meeting with us. So we staged the house. And by the way, if they're both beautiful, wonderful people, but and Mrs. Tomlinson, she's a strong woman. You don't just walk in her house and say, "Hey, do this," and she does it. No, sir. Okay. So we had a tough conversation with her, and it was made very clear to us she didn't want to do staging. But we had a tough conversation, and guess what we ended up doing? We showed them the value of why we want to stage the house, and we got it staged. Okay. And by the way, they spent and I don't remember exactly what it was, but it was $9,000 or $10,000 that were spent on this house.
Right.
To stage the home. But what happened? What's the result? Well, but one more thing, actually, before we jump into the result. The third thing we did is we exposed the heck out of this thing. We produced professionally edited video. We got over 100,000 views on YouTube, cumulatively between all the different places we got it covered. We let the world know about this house. End result, sold at full price. That's $3.495 million when they were willing to take 3.3.
Right.
Okay, that's almost $200,000 more for their $10,000 investment and a smarter reposition and positioning themselves in a little bit of a smarter way.
I think
we can dive deeper into that. You can always reach us off air. It's going to be 858-356-2020. We'd love to talk to you in more detail. I'm Dan Beer.
I'm Todd Pianin.
And we love having you. Come back next week. This is Real Estate Exposed on News Radio 600 KOGO and iHeartRadio.